2025 has begun with a variety of headwinds in the geopolitical and macroeconomic arena. Donald Trump is upending the global order that has been familiar for at least 7 decades. And he's upsetting the apple cart with respect to raising trade tariffs in terms of the relationships with America's trade partners. Of course, for the United States, this is going to have implications and potentially negative as well. In the ensuing months, inflation is going to accelerate. And the ensuing quarters, growth is going to be tempered. American citizens may come to regret these policy actions. That said, we still think that the global economy will grow at a fairly respectable pace in 2025. We estimate that global growth will be in the vicinity of 3.3%. This will still be a little lower than the 3.7% annual average that was prevalent in the 20 years to 2019. The US economy will grow this year by around 2.8%, underpinned by still strong consumer demand, pending tax relief, and also buoyant productivity growth. In the remainder of the developed world, growth is going to be far less flattering, probably in the vicinity of 1%, mostly because of uncertainty related to the trade wars and because productivity growth in much of the developed world is pretty tepid. We anticipate China will grow around 4.5% this year, lower than the 5% of last year. China will probably forsake 0.5 of a percentage point of growth because of the trade wars. We still think, nonetheless, the authorities will attempt to stimulate the economy in the way that they've done since September of last year, providing some buoyancy to consumer demand. In short, then, for the global economy, a respectable 3.3% growth for 2025 is to be cheered. However, there is a great deal of forecast risk for the volatility that envelopes the global economy. We anticipate Sub-Saharan Africa will grow by 4.3% in 2025, up from 3.8% last year. For the most part, this growth will be underpinned by increased consumer spending, as well as a lessening in imbalances. By imbalances, we make reference to public finances, prices, as well as net exports. Favorably, inflation is falling, and in more than 1/2 of sub-Saharan African countries, inflation is at or even below central bank targets. Further adding to this favorable silhouette, public finances have stabilized. In more than 2/3 of sub-Saharan African countries, we've begun to see public indebtedness begin to crest, and with it, increase investor flows onto the continent. Of course, there still are some risks: climate change, geopolitical fragmentation, China and a slowdown in China in particular. And of course, Africa is very often plagued by virulent forms of political fragility. But that notwithstanding, the acceleration that we anticipate for 2025, we think will also continue over the medium term. So we estimate over a 3 to 5 year horizon, Sub-Saharan Africa will grow by approximately 4.5%. But again, like with the international segment, there is the risk of forecast error, quite simply because we are in a very volatile epoch. South Africa is enjoying broad-based economic recovery. This is being underpinned by consumer spending, fixed investment, and also increasing traction in the reform program. We think 2025 will open the space for improvements with respect to, say, crime, the water crisis, local government, and transportation. We note President Ramaphosa has been far more assertive in this second term, and perhaps because he is unencumbered by ideological and patronage interests of the party. Certainly, along with other alliance members, there seems to be greater conviction that the GNU can hold and will be a vehicle for increasing reform traction. We think the combination of falling inflation and interest rates, alongside more secure energy supply, early momentum at Transnet, and of course more tension with respect to the water crisis. Businesses generally, and especially small and medium enterprises, will find the general economic climate more comforting, particularly as the Minister of the Department of Trade and Industry very aggressively seeks to make business conditions easier, removes red tape and bureaucracy, and overall has just fostered an improved business-friendly climate in terms of relationships between business and the department. Overall, though, we think that the economy will accelerate this year from last year. We pencil in 1.8% growth, and that's more than double the 0.7% growth that would have been featuring in 2024.